the end of the trading day at the New York Stock Exchange. It was a rough day across the board. The Dow Jones spent the entire day in the red, losing over 500 points.
The S&P and NASDAQ also dropping. The 3% loss on the tech-heavy NASDAQ is tied to Facebook parent company Meta, which at one point dropped 26% after reporting weaker than expected revenue growth. That was the company's biggest one-day drop ever.
Lori Bettinger joins us now for more on all of this. She is the co-president of BancAlliance and the former director of the Troubled Asset Relief Program. Lori, welcome. Great to see you. So major stock indexes dropped today, coming off of gains earlier in the week. So what drove the market so far down today?
You know, at this point, I think you almost have to ask yourself, what isn't going on? I mean, when you look across almost every area right now, there's so much uncertainty. And you know, financial markets do not love uncertainty. But if you look at the economy, you know, in terms of, let's just take inflation, if you look at what's going on, maybe domestic politics, international politics, you know, everywhere we turn, there's a lot of uncertainty. And I think we're seeing that reflected in the market moves recently. I think it's important to remember, right, the markets are close to all-time highs. You know, we're coming off of a pretty strong earnings season so far. But it's also, with this uncertainty, I think it's very difficult to make predictions, and everything feels really reactive right now, where investors, and in fact, I'd say business leaders, are looking for a sign, and, you know, you see one sign, you're like, okay, maybe we're going to move in this direction. And then, you know, everything seems to change in a day or two, and so you move towards that direction, even though maybe a lot of the fundamentals aren't changing. So I think we're seeing uncertainty combined with a lot of, you know, reactions to whatever the news of the day is, and every day is bringing a lot of news right now.
And Lori, let's include a few other data points, right? One day of market swings is one aspect of the economy, but we also know that the number of first-time unemployment claims fell for a second consecutive week. The 4-week average continuing claims is at its lowest level since the 1970s. So that, plus the uncertainty you're speaking about that we're seeing now, means what exactly for the economy and any efforts for it to recover fully?
It's a great question. I mean, as you mentioned, there weren't a lot of surprises in the unemployment claims today. And also, I think let's just put this in context for a moment. If you even look at a year ago, the first time claims, they were at around 800,000, you know, and now we're in sort of the lower 200,000. So clearly we're in a better place even than we were, you know, a year ago, which, you know, didn't feel like, again, better than at the start of the pandemic. But what I think we're seeing is a really interesting effect of, you know, this recent COVID surge and Omicron on the labor markets, where, you know, at the beginning, it was sort of this question around, well, is this going to really impact layoffs? You know, are employers going to start shedding, you know, maybe in industries like hospitality or restaurants where you might see, you know, the first direct impact of the surge. But what I think we're actually seeing is that what's being impacted is the labor supply, employees. You know, people are leaving the labor market maybe temporarily due to the surge, and that's seems to be a much bigger impact than employers pulling back on hiring or even laying people off. Like there was a recent census report that showed, you know, that over 14 million people between late December and the middle of January left the labor market for a reason directly related to COVID, whether they were sick family member, childcare issues. I mean, that's a huge number, and that's only a few weeks ago.
So, Lori, to your point, the Labor Department is releasing the January job numbers tomorrow. We heard the White House signal that the numbers are not going to be good, so I guess people are prepared. But what are you expecting to see, and how might those numbers move the markets tomorrow?
It's really interesting. You know, I think that we're looking at this consensus that we'll have some modest job gains, I think around 150,000. But there's a pretty big range. You know, I think there's estimates that we'll lose up to 400,000 jobs or gain, you know, 250,000 jobs. I'm not sure. I think, you know, it'll be an important reading, but I'm not sure that it's going to determine, you know, where we're going for the rest of the year. And like with so much economic data, I think if someone's looking for bad news, you'll probably be able to tease something out of the release tomorrow. And if you're looking for positive news, you might see that. I mean, to me, even if we have a really unexpectedly negative report tomorrow, I would expect that to sort of bounce back in February. You know, it doesn't feel like there's been a really fundamental disruption so far to the labor market. Yes, you know, we're seeing some of the recent surge work through, but you know, I'm not expecting anything that far away from the consensus. I'm hoping that, you know, we will have added at least some jobs. But, whatever it is, I don't think we should rush to any judgment.
Lori Bettinger, thank you so much. We always appreciate your financial insight.
Yeah, thank you, Lori.
Thank you.